Welcome everyone, my name is Philippa Jalland and I'm the Member Relations Manager here at Invest Africa. I wanted to take a few moments before we start to welcome you to this webinar on behalf of Invest Africa. For those of you who don't know Invest Africa, we are a platform for business leaders, investors and entrepreneurs to gain insight into doing sustainable business in Africa. Our network is made up of global organisations, private investors, fund managers, family offices, policymakers and entrepreneurs that add value and strengthen their position and business strategy for the continent. With over 60 years of heritage in promoting business and investment opportunities across the continent, we have developed our strategic position as a key voice of industry and government. Our DNA is connecting business and investors, and we do this here in London, throughout our chapter cities, and of course, and more importantly, on the continent itself. If you're interested in finding out more about Invest Africa, please do feel free to get in touch with myself or my colleague, Alexander Woods, after this webinar. Delighted to answer any questions anyone has. Thank you very much to EXX Africa for co-hosting this event, and to Dr. Besseling for your invaluable insight on this topic. Over to you, Robert.
Thank you very much, Philippa. Good afternoon or good morning, wherever you are, ladies and gentlemen. Thank you very much to Invest Africa for co-hosting this webinar, which I hope will be many more successful webinar runs in the future. I'd like to briefly introduce myself. My name is Robert Besseling. I'm the Executive Director at a specialist intelligence firm called EXX Africa. We provide analysis and forecasts on political risk, security risk and economic risk across all of Africa's 54 countries. Today, I'd like to talk to you about the topic of political risk and the cost of political risk to commercial operations in Africa. And I've broadly entitled my webinar to you today, All Change in Africa. And that really goes back to the events, the tumultuous events that we have already seen this year, by which I mean revolutions, coups, terrorist attacks, cyclone events, and various other political events across the continent. Just cast your eyes back to the very start of this year, for example, when the small oil-producing country Gabon, the military tried to overthrow the ailing president. And for a few hours, it looked like we might start 2019 with a military unconstitutional intervention. Similarly, a few days later, Zimbabweans, fed up with their government's increase in fuel levies, marched to the streets, and violent protests erupted when the police and intelligence agencies cracked down on civilian protesters. Similarly, internet and social media applications were closed for several hours. In a quite dramatic political transition, also right at the start of the year, we saw a new president entering office in the Democratic Republic of Congo, technically at least replacing the long-time Kabila dynasty. And then, for many of you, I'm sure, who are following events in Kenya, we saw the start of the year also with a rather unfortunate and dramatic attack in the heart of the commercial business heart of Nairobi, the capital of Kenya. An attack very much targeting luxury hotels, offices, and venues frequented by expats and business people. Very north of Mozambique, we have seen over the past 2 years an Islamist insurgency. Now, it is still debatable to what extent that insurgency has cross-border intervention and cross-border support from other Islamist militant groups, but certainly for the commercial gas operations up north, this has become an increasingly important risk indicator. And this is just at the same time when Mozambique, as well as various other southern African countries, started 2019 in the aftermath of two very destructive cyclones. In Nigeria, we have seen elections. Generally speaking, many analysts believe that these elections would be momentous in driving political change and potentially also driving political violence. However, we only saw localized outbreaks of violence in places like Rivers State or some other Middle Belt areas, but certainly not countrywide. More momentous, however, has been the potential resumption of a civil war in Libya. And this certainly has caused disruption when Eastern forces captured the oil fields in the south of the country and then moved on the capital Tripoli, causing further disruption to maritime, aviation and energy sectors. This also is important because the collapse of the state in Libya in 2011 also triggered a deterioration of the Islamist insurgency in Mali and the broader Sahel region. And certainly now at ex-Africa, we are becoming increasingly concerned of a southward drift of Islamist insurgency towards the Gulf of Guinea coastal cities, places like Togo, Benin, Nigeria, Ghana, Cote d'Ivoire, increasingly facing the threat of terrorism from its northern neighbors. And that brings into perspective also the momentous revolution that we have seen in Algeria so far. Again, with demonstrations now on the way for 17 weeks, and again causing potential paralysis to the state in a very important commercial country in Africa. Another large country in Africa also seen a revolution. However, here also the generals seem to have hijacked a revolution and have stopped, at least for now, the daily and weekly protests in Sudan. And then just look at South Africa, where we have seen also some very important elections starting 2019. And here, President Cyril Ramaphosa was re-elected with a mandate to boost the reform effort in South Africa, hopefully to boost the country's economy. But we have to ask ourselves, despite all this momentous change, what has actually changed on the ground? How will it actually impact the political risk outlook? And what is the cost to commercial operations moving forward? What do I mean by this? Well, in South Africa, President Cyril Ramaphosa is still South Africa's president, granted now with a strong electoral mandate. In Nigeria, we saw a record expensive election in February. However, electoral turnout was at its record low. President Muhammadu Buhari is still very much firmly entrenched in Nigeria's presidency. Another potential smiling statesman in Africa is former President Joseph Kabila, who handed over to Mr. Felix Tshisekedi, who I showed you earlier, and still remains very much in charge of the Democratic Republic of Congo. In fact, he has actually refused to move out of the presidential villa in Kinshasa. A gentleman who might have less to smile about so far this year is General Assala, who has been for years the main power behind the throne in Algeria, and he's now trying to broker a political transition in Algeria between the military, the protesters, and various foreign forces which are seeking political transition in Algeria. Similarly, also, the Sudanese generals remain firmly in charge despite the revolution we saw there. And even in a country like Zimbabwe, we have seen over the past few weeks a number of associates of former President Robert Mugabe coming back into government to try and resolve the situation there, showing that long-time President Robert Mugabe still can play divide and rule. And then in South Africa, which I've mentioned several times already, despite all the talk of corruption investigations, or the end of state capture, a new dawn, or the launch of the Zondo Commission into state capture. However, we have still seen no high-profile prosecutions in South Africa. So all of this leads to ask the main question is, what is political risk? And my main argument would be that political risk all depends on the perceiver. The perception of risk determines its measurement. What do I mean by this? A couple of months ago, I was in Abidjan and I asked an audience of export finance bankers what they thought is political risk. What is their perception of political risk? And here on this word cloud, you can see their answers. And some of these obviously are very much African-centric. Items such as disease, or climate, or war and mutinies are very much risks that we see frequently in Africa. But above all, the key words that came out are not at all Africa-centric. They are very much global trends in political risk, such as populism, or infrastructure, or perhaps a lack of infrastructure, debt sustainability, and above all, nationalism. It is in fact the threat of raising walls, technical walls or tariff walls, that are causing the real threat to business in Africa, according to this particular audience. It's then up to me to try and figure out how to metrify these perceptions of risk and to organize them into different categories. You can, for example, quite crudely here, categorize risk as security risk, terrorism and war, or political risk, which essentially is always driven by some sort of political stability or instability, which drives contract risks or industrial action. And then there is economic risk, which quite crudely really comes down to the sovereign's ability to pay up, to meet its obligations, to meet its debt servicing, or to meet its contractual obligations to counterparties. That type of metrics allow us then to quantify risk. And at Ex-Africa, we quantify risk internally and then are able to provide a forward-looking risk analysis and scoring system, which allows us to scale risk according to these categories here, these color-coded scales you can see here. Now, various different countries are marked in the green, such as Senegal or Namibia and Botswana. Many other countries are rated in the red severe category, with most falling somewhere in between. You may notice from the title here that this is actually our outdated map from the first quarter of 2019. This is our map for the current second quarter, which we're due to update next week in preparation for the third quarter of this year. And for those of you who caught the difference in colors here, you potentially saw a change in color in Algeria, which initially we had rated in the more friendly yellow elevated category. But because of the revolution and because of the lack of elections, which have now been indefinitely postponed, this country has now moved up into the higher orange category of our internal ratings. Similarly, Nigeria moved the other way. It moved from pre-election high orange to post-election more stable, more friendly yellow elevated category. Now, I'm quite keen to talk about these countries briefly as quick case studies on how political risk changes. Algeria was a country where most analysts would have said that we were going to see relatively stable elections in the beginning of 2019 and then move towards a managed political transition later in the year or next year. Instead, we are now seeing 17 weeks of mass demonstrations, hundreds of thousands of civilians coming to the streets in Algiers, Oran, and many other Algerian cities every week, protesting. This led to the resignation or ousting of longtime President Abdelaziz Bouteflika. But Mr. Bouteflika has been ailing and powerless for many years. Therefore, it's not the absence of Mr. Bouteflika in the presidency that is causing the political instability. Instead, the real political risk is driven by the change in guard, the military now controlling a broad crackdown on corruption, at least publicly so, against senior figures of the former regime, both within the political sphere as well as the business sphere. This means that all the key contracts which were signed in Algeria over the past 20 or 30 years, their key counterparties are now being arraigned on corruption charges, causing great confusion for the country moving forward. Similarly, our internal location analytics tool has, over the past 16, 17 months or so, recorded an increase in violent incidents, particularly in the north of Algeria, but also potentially more worrying in the south of the country, where a potential destabilization of the Algerian state could trigger another insurgency and effects on the Sahelian Islamist militancy. This means, of course, that Algeria has already seen a downgrade in its economic forecasts. Inflation is spiking. The government is borrowing more to try and fill its budget deficit and to match the falling foreign exchange reserves. And even though Algeria was supposed to mark a tentative economic recovery over the course of this year, the IMF recently downgraded to an expected growth forecast of 2.3%. Personally, I think this will be further downgraded given the continued uncertainty we see in Algeria and disruption to business. In fact, Algeria could drop down to the 10 slowest growing economies in Africa. That means it would fall into the same category as countries like Zimbabwe or Sudan, which are seeing similar post-coup political transitions. It might even displace the other country I wanted to mention to you, Nigeria, which is going completely the other direction. As I mentioned, the risk outlook in Nigeria is improving, more in line with some of the countries in the elevated risk scale on the Gulf of Guinea. And similarly, I mentioned earlier that Nigeria's election, even though it was its most expensive ever election, had a record low turnout. Generally speaking, most Nigerians believe that their recent elections in February were quite boring. Generally, President Buhari maintained his presidency. The Senate and House of Representatives are controlled still by the governing APC party, and forecasts of violence countrywide did not come out to reality. Even in the Niger Delta, the key oil-producing region, which usually votes for the opposition, we did not see broad violence or indeed a return to insurgency. This is good news for Nigeria's all-important oil sector. Nigeria last year exported some $50 billion worth of crude oil and related products. Most of this goes to countries like India or traders in the Netherlands or other parts of Europe, as well as South Africa and Asian countries. And most of these imports of oil from Nigeria are increasing in these countries I just mentioned. The improving oil outlook, both in price and output, means that Nigeria is finally able to set the bad years of 2016 and 2017 behind it, and is now making a tentative but gradual economic recovery. Inflation is stable, and the country is now moving to borrow more from Eurobond as well as syndicated and commercial markets to try and boost its spending, particularly on regional and local infrastructure. Another key point to make is, to the extent that Mr. Buhari, the second-term president in Nigeria, to what extent he is likely to change his outlook. I mean that much of the political risk in Nigeria of the past 5 years came due to a lack of decision-making from the presidency, from Mr. Buhari. Mr. Buhari will never have to run for office again. This might indicate that he will become more bold in economic or political policy moving forward. And we're already seeing some indications that he might move towards privatizations in the oil sector or other currency exchange unifications that might improve Nigeria's outlook. So these are two countries which I've mentioned. Algeria, which was meant to hold rather mundane elections, and instead we've seen a revolution and no elections at all. And then Nigeria, where most people were worried about a rather exciting election, and instead we've turned up with a very much the same situation as we did pre those elections. That makes you ask, do African elections really matter? Now, if you remember Kenya 2 years ago, many people stopped investing in Kenya in anticipation of a return of election violence, potentially on the scale of elections that were held 10 years previously. Instead, we saw an election which was disputed, which was then annulled in a very strong precedent by the country's constitutional court, a rerun of elections which triggered further violence and confusion, and in the end, a situation where indeed economic, bond and currency markets were disturbed, but very much on the short term only. Kenya's economy has recovered. It's already growing more than 6% a year. Its currency and bond markets have recovered, and the same people remain firmly in charge in Kenya. So that makes you ask, what other countries are likely to face elections later this year or next? Well, I mentioned Nigeria and Algeria, and other countries as well, like South Africa, Senegal, Malawi, and Comoros have all held elections. I'm particularly excited at the prospect of elections in Mozambique, Botswana, and Tunisia later this year, where we could potentially see some surprises in the outcome or the process. Next year, potentially even more interesting in terms of the elections outlook, where a number of countries in war zones, like Burkina Faso or Central African Republic, will hold plebiscites, and also some very important commercial jurisdictions like Ethiopia and Tanzania. I'm quite excited to see the lead up to those elections over the next year and a half or so. Then we have to ask, if elections only have a short-term impact, then how do we estimate the longer-term impact or fallout from elections? South Africa is a very good case, where over the past few years, the outcome of last month's general elections were almost undisputed. Everyone agreed that Mr. Ramaphosa would very much likely be re-elected. Instead, it is the longer-term post-elections outlook which will determine South Africa's political and economic risk outlook. And this is because Mr. Ramaphosa is seeking, for the first time ever, an electoral mandate for reform. He managed to gain this reform at those elections last month, and is now seeking to broadly reform the state-owned enterprises and other parts of the South African state and economy. Tomorrow evening, Mr. Ramaphosa will make his first State of the Nation address in front of South Africa's Parliament, where he will be pressured to clarify his position on bailouts and reform of state-owned enterprises. This is likely to have some sort of a backlash from entrenched interest groups in the country. Labour union groups have already threatened further strike action. There is a prospect of economic sabotage and further political unrest across parts of the country, particularly near the major cities, as well as in politically contested parts of the country like KwaZulu-Natal and Northwest. Similarly, the investigations into corruption, whether they lead to prosecutions or not, at least are also triggering a backlash from those politicians and former politicians who are being targeted. What this means for South Africa is the prospect of further violence and political instability, at least for the next year. In fact, South Africa's economy contracted by 3.2% in its first quarter and may fall into recession in its second quarter. The latest forecast from the IMF showing South Africa's economy growing on an annual basis by 1.2% is very likely to be revised downwards. Most analysts are now seeking an estimate of around 0.7 or 0.5% even of growth for South Africa this year. And this is mostly because of political instability that is driven by a lack of settlement following these elections in South Africa. We've done a lot of work recently on the impacts that this type of unrest and political stability has to African supply chains. And to bring in a number of statistics here, some provided by insurance brokers like Aon, who said that 70% of countries in sub-Saharan Africa are currently at risk from strikes, riots, and other forms of civil unrest. And 25% of sub-Saharan countries are at risk of sabotage and terrorism. A company called Agility every year releases its Emerging Markets Logistics Index, with logistics professionals citing corruption as their highest threat in sub-Saharan Africa, and by far terrorism as the greatest threat, primary concerns in North Africa. All of them agree that across Africa, government instability is also a key peril. Another insurance broker, Willis Towers Watson, in recent interviews for its Transportation Risk Index, also says that many of the interviews it conducted with executives have identified geopolitical instability and regulatory uncertainty as key trends in people's decision-making processes. So then we have to ask, what is the cost of political, security, and economic risk? And obviously, this very much depends on each project. And there are lots of different indicators and metrics that can be used. First of all, as I mentioned to you earlier, each country has a different political risk outlook, very much based on all those metrics that I showed you earlier, where Algeria and Nigeria can cross each other in just a few months in different directions in their risk outlook. It also very much depends on the size of the economy, where a country like Nigeria, for example, is now firmly on course to reach a $500 billion economy at the end of this year, while other countries like Sao Tome and Principe, for example, may just about struggle to reach even $500 million GDP. The other key metric to build into this is the growth of the economy. It is undoubtable that deals can be done across all of Africa, including in countries like South Sudan or Libya and Somalia. But generally speaking, it is the fastest growing economies in Africa which attract the most trade and investment. Therefore, countries like Ghana and Rwanda, which have a relatively benign political risk outlook and also growing at a fast rate, generally speaking, are more stable locations for investment than others. However, that is sometimes contradicted by the actual data available on foreign direct investment. Data from the last 2 years here, for example, shows that Egypt, yet again, attracted huge amounts of FDI flows over 2018. South Africa recovered somewhat, mostly due to the efforts of Mr. Ramaphosa before those elections, attracting about $5 billion worth of new investment. Similarly, the political transition in Democratic Republic of Congo has attracted new investment, and Ethiopia also still very much in the top 5. Other countries like Tanzania and Ghana very often feature in here as well. The question that I want to leave with you is, which African country will attract the largest chunk of foreign direct investment in the coming years? Now just ponder that for a moment, and perhaps go back to the previous slide. It's in fact not a country mentioned on that previous slide. It is Mozambique. Mozambique, currently hosting the Africa-US Business Forum, just having signed off final investment decision for a $20 billion liquefied natural gas facility. Mozambique is building Africa's most complex supply chain for liquefied natural gas, as well as associated mega projects. We're doing a lot of work at the moment trying to support risk mitigation efforts in Mozambique. And some of the developments in the country are very exciting, not just for the gas, but also for the infrastructure development and other mega projects that come on the back of those. However, as I mentioned at the very beginning of my presentation, all of this, of course, is happening in a region shared with Islamist insurgents and banditry groups. Over the past 2 years, we have seen a steady increase in insurgency in the very north of Mozambique, just on the border with Tanzania. Here, counterinsurgency tactics have so far proven ineffective and sometimes have actually exacerbated the problem, causing mounting local community grievances. At the beginning of the year, we saw an attack on a convoy of Anadarko oil and gas workers. And since then, we've seen further attacks that have affected natural gas workers. The problem is that many people perceive this as an Islamist militant group directly targeting the natural gas sector in northern Mozambique. So far, I have to say, we have seen no evidence of this. The problem is that the perception of risk may, in fact, drive some of this investment away and cause further commercial disruption. And this comes at a time when a country like Mozambique, which is recovering from a dire economic crisis, a 3-year-old economic crisis, desperately needs this foreign direct investment, which could reach $50 or $60 billion over the next 10 years. Inflation has stabilized, and the growth forecast for Mozambique is also stabilized. Most importantly, Mozambique is now moving towards an agreement on the restructuring of parts of its debt with some of its bondholders. There's also the possibility that Mozambique will annul various Eurobonds that were never publicly recognized by Mozambique's parliament and its treasury. So these agreements need to be made with the prospect of natural gas revenues coming on stream in the future. So this is a critical time for a country like Mozambique. It also builds into the importance of Africa's infrastructure development boom. In general, the African Development Bank estimates that Africa needs $150 billion in financing to fund infrastructure development in Africa on an annual basis. The funding gap stands at around $30 or $40 billion a year, according to the AFDB. Much of the new money is coming from debt issuance, where over the past few months and years, we have seen growing concern of a number of countries, particularly with the involvement of the Belt and Road Initiative from China, as well as other bilateral or commercial syndicated debt, which has caused problems, or at least some concerns, in a number of African countries. If you are familiar with our work on debt, you will certainly know that we have done a lot of work over the past year on countries like Mozambique, or Zambia, or the Republic of Congo, which are all in some way or some form or another facing a debt crisis. Other countries, like Egypt, for example, the economy is now reversing and improving so dramatically that Egypt may actually be able to pay off some large lending commitments to Saudi and Emirati sovereign lenders over the course of 2019. Just when it exits its current IMF program. So this is good news for some of these countries that are heavily over-indebted. And on the other side of the spectrum, there are countries like Nigeria, I mentioned earlier, or Tanzania, who are all trying to boost their infrastructure development and trying to do so through debt issuance. And they certainly have a better outlook, as their total public debt to GDP exposure is not yet that constrained. Finally, I'd like to drop in a few suggestions in terms of trying to mitigate political and security risk when you are doing business in Africa. Certainly, if you have an extensive supply chain, or you're dealing with projects and companies that have an extensive supply chain, it's important to take stock, to audit processes, to visit ports of doing business, and to survey services across the continent. The integration of corporate security in the full decision-making process will improve the resilience and continued survival of a corporation, or indeed of a deal. The political risk insurance market is steadily growing as well, and coverage is now issued by both public agencies and private insurance companies. And if you are seeking a political risk insurance, there's a strong broker market out there as well who can facilitate this type of coverage. At the same time, it's very important to know who you are doing business with. I mentioned in the case of Algeria, for example, that the key counterparties doing business in Algeria over the past 20 or 30 years, the majority of these individuals are now standing trial or have been detained on corruption charges, with, of course, the associated reputational risk. So knowing your customer or knowing your counterpart is absolutely crucial. And another part is trying to understand your local operating environment, trying to understand not just who you're doing business with, but also trying to understand the local political, economic, and security climate, not just at the moment, but also in the future. Now, I'm reaching the end of my formal presentation, and before I open up to questions and hand over back to Philippa, I wanted to briefly mention that our firm, ISLAMIST Africa, would very much like to offer a complimentary trial for 2 or 3 weeks to all the participants of this webinar today, to try and showcase some of the analysis and forecasts that I've shown you in this webinar on countries like Algeria, Nigeria, Egypt, etc. So if you are interested in taking a look at some of our analysis work, you're very welcome to drop me directly an email at robert.besseling@exxafrica.com, or indeed contact Invest Africa, who'll be able to relate your inquiry directly back to me as well. Now, I already would like to thank you very much for your attention this afternoon, and I'm going to hand over back to Philippa of Invest Africa to filter some of the questions that you may have. Thank you very much.
Hello, Robert. Thank you so much for this. It's Alex Woods here from Invest Africa. I think we decided that Philippa would do the welcome note and I'd just look at some of the questions. We've had several, actually. I think the first one really is from Craig Veitz, so thank you very much, from Nedbank, who's joined us here from Johannesburg. And he has just said, so from looking at your sort of risk rating map, it appears that Benin is at a moderate risk, although he states that it was clear from the April elections in Benin that democracy has somewhat broken down owing to the opposition being barred from participating in the elections, a low voter turnout, and the internet being blocked. Why do you see Benin as moderate as opposed to elevated or even high?
Thank you, Craig. That's a very good question. We've seen a lot of interest in Benin over the past few months. So I'm just going to go back there to the reference that you make to Benin. Benin certainly has gone through quite a roller coaster few years, where we have seen President Patrice Talon come in and implementing some strong structural changes to the country's investment legislation and trying to incentivize more foreign investment in the country. Benin, however, is facing a backlash from many trade unions and the political opposition in the country, which, as you mentioned, Craig, did essentially lead to a political process which has completely eliminated the opposition from the parliamentary process. Now, there are various different debates surrounding this, but of course, in terms of the sustainability of the current political system, this does raise some question marks and potential concerns. In fact, you have actually preempted us that we are due to upgrade certainly Benin's forecasts to potentially the yellow category in our next week's change in scores of quantitative risk forecasts. However, it is important to note that despite the change in the political scenarios in Benin, much of the very substantial project finance which is going into the country is still continuing and is still being signed. A number of very important infrastructure deals are being done in Benin, and this is not being disrupted by the ongoing political process. So in terms of an economic or contract outlook, Benin does not currently offer a significant increase given its risk outlook. It's purely the political situation at the moment, which may in the longer term create a riskier operating outlook. So from us, you can actually see a increase in the quantitative risk outlook of Benin in the coming week. Although this might be slightly mitigated by the continued benign economic prospects of the country.
Fantastic, Robert. Thank you very much for that. And Craig, I hope that answers your question. We've got another question here from Deblina Roy. What kinds of businesses are affected most from the political risks in Africa? Is it big companies or small to medium enterprises?
I think that is a very interesting question. I think every type of business is affected by political risk. Sometimes it is the large entities which come into the news. If you've been following the situation in the mining sector in Tanzania or Zambia or the Democratic Republic of Congo over the past few months, you will have heard of some of the world's largest mining companies facing contract and tax disputes, or other companies facing frustration in places like Cameroon or the Republic of Congo. But it is the SMEs which rarely feature prominently in these headlines. It is, of course, very much these SMEs which do not have the necessary protections against political risk. The World Bank or bilateral investment treaties can offer guarantees and mediation, arbitration provisions, as well as political risk insurance for larger corporations and foreign investors coming into Africa. But it's small and medium-sized enterprises which sometimes feel the real pinch from a sudden change in legislation, from a commercial disruption, for example, the revolution in Sudan, or the security situations, or in fact a slowdown in the economy. So it is the SMEs which are very often facing the same situations as the larger corporations, but do not have the necessary protections in place to mitigate their risk exposure. If sufficient amounts of SMEs, of course, are affected by political risks, this will have a broader and longer term implication on a country's political risk outlook, and then also start to affect, in the end, larger corporations. For example, Sudan, over the past few months, has seen commercial disruption in its capital, Khartoum, and across the river in Omdurman. roadblocks have been erected by paramilitary forces and causing huge traffic jams in Khartoum and in these cities. This means that SMEs and local banks have barely been able to operate. Now, as the banking sector is being starved of liquidity and operations, this will obviously start to impact the broader operating environment in Sudan as well. So even though it seems as if the two spheres of large corporations, multinationals and SMEs are very distant from each other, they are to a certain extent also interrelated. So thank you very much for that interesting question.
Thank you. We've got lots of questions coming in now, so we'll try and move through all of them, I think. We've got one here from Jessica Wade, and who says, you mentioned that the reduced growth outlook for South Africa is related to political issues. Interested in your thoughts on the role of the power blackouts in Q1, or if you see the lowered growth outlook as largely separate from the blackouts.
The so-called load shedding, the blackouts in South Africa, obviously have very deep-rooted problems, which, given the number of questions, Alex, I'm not going to go into, but in the end, all of it is very much intertwined. The political and economic drivers of the blackouts are very much intertwined. What we need to see right now from the South African government is a commitment to, one, bail out state power utility Eskom, which the government has done already committed to for the next 3 years. And we're likely to see further funding provisions being officialized tomorrow at the State of the Nation address. But what is likely going to lack is the structural reform, including partial privatizations and retrenchments of workforce that most analysts on Eskom believe are the only panacea for South Africa's power sector problem. If tomorrow at the State of the Nation address we are likely to see President Ramaphosa offering only some commitments on a funding or cost-cutting level, but not talking about partial privatizations and job cutting, then we may have a continued longer-term problem in South Africa's power sector, which of course then relates directly into the economic outlook of the country, affecting South Africa's credit rating with its final remaining credit agency, which rates South Africa in investment grade, as well as the broader economic outlook for South Africa, as long as these load shedding outages, these power outages continue to affect or disrupt economic output. So thank you very much for that question. I certainly would suggest tuning in tomorrow evening, I think it's 7 p.m. South Africa time for that State of the Nation address. Thank you.
Thank you for that, Robert, and Jessica as well for bringing up that sort of very important question around the role of Eskom in South Africa and sort of how Cyril Ramaphosa's presidency will shape that. We've got a couple more questions and we'll try and get through them. So one here from Torsten Richter, and who asks Robert, so you mentioned the growing PRI market on the one hand and increasing political risks on the other. We have in his organization, they have some markets, particularly in West Africa, seen less PRI appetite for their projects. And do you see a similar observations, or do you see a different development? Can you comment a bit more generally on the development of risk appetite for PRI providers?
Torsten, thank you very much for your question. I believe we've talked about this in the past as well. There's definitely a trend here in that some private market insurers or indeed export credit agencies have blocked out some countries completely in terms of coverage or in terms of exposure. So a number of African countries, which until recently were generally benign in their political risk outlook, it was also quite easy to ensure political risk coverage. Now, countries like Zambia or Tanzania, which I mentioned earlier, or Mozambique, of course, which only a couple of years ago certainly were attracting a lot of investment and associated political risk coverage. Many of these countries have now essentially been closed for both public and private insurance markets. If you are looking in some of the more exotic places, then there are brokers around, of course, who should be able to find you a coverage for some of the countries out there, like Sudan or Algeria, which are going through situations at the moment. Certainly, there should be some appetite still to place risks in these markets. So I'd certainly reach out to a broker for some of the more exotic locations, so to speak. Thank you, Torsten, for your question.
Thank you. So a couple more then. We've got here Chris from ABSA, the vice chairman, who's asked the following. He was interested that you rate Kenya as high in your sort of risk map, and just wanted sort of a bit more reasons sort of why you have done so.
Hi, Chris. Yeah, Kenya is always a tricky one because it's a country which is growing, you know, at a very respectable over 6% annual GDP growth. It is a country which has proven itself, despite some tumultuous elections, to be politically stable, and generally speaking, despite some high-profile terrorist incidents, generally is also calm in terms of a security outlook. But there are some key questions which we need to foresee. First of all, Kenya has almost certainly overpaid on some of the debt to build some of the key infrastructure projects over the past few years. I'm not just talking about Chinese project finance for the railway lines, but also some of the Eurobond pricing and some of the commercial syndicated debt has been too high, and Kenya will struggle to pay or to service its debts going forward. You can already see the country reaching out to the World Bank for direct budgetary support to meet some of those key budget appropriations. And another factor I'd like to mention on Kenya is, even though the political situation seems stable at the moment, there are already murmurings for the next round of elections. Kenya seems to move from one electoral cycle to the next within days. And already now, even though that handshake I showed you earlier between President Uhuru Kenyatta and former opposition leader Raila Odinga showing some kind of political stability, already there are factions and groups and interest groups in the country politically positioning themselves for the next round of elections. This means a potential breakup of the ruling coalition, the alliance. It could mean further outbreaks of political violence in some of the key contested areas in the country. And of course, this all ties into Kenya's economic policy making decisions. So there's a lot more to mention here in terms of the debate around the IMF program, the interest rate caps, etc., which I think all build into the mixed bag outlook for Kenya. So I remain positive on Kenya, at least in the one-year outlook, but sometimes in the longer-term outlook, we have to potentially move Kenya into a higher category, particularly on political stability factors and debt sustainability factors. I hope that answered your question, but there's certainly a lot more on Kenya, which I'm happy to send you after this conversation as well, if you drop me a line. Thank you, Chris, for your question.
Perfect. I think we've just got time for one more question. I mean, I having looked, and there are many, so thank you all for putting your questions forward. A number of you have asked about Nigeria and the recent elections, you know, and I think we'll take what Uchenna says just as the sort of the overarching question, who says that the European Union Election Observer Team sort of over the weekend came out with a report on the election stating that the elections were flawed and so not free and fair. And she mentions a couple of other institutions who have also come out and said that. Uchenna just wanted your opinion, Robert, on this report, and whether you see this as the start of a reshaping of the country's political landscape, particularly with regards to President Buhari.
Thank you very much for that question. Yeah, there are a lot of reasons still to keep caution on the outcome of the electoral process in Nigeria. We have certainly mentioned this in our analysis since those February elections to our clients, warning that there is still slight but present potential of a reversal of the electoral process, the elections, at least the presidential elections in February. Those elections were won by Mr. Buhari, firmly so, with a strong mandate, perhaps unsurprisingly, but there were a number of electoral irregularities across the country, including a sudden delay in the holding of elections, including a potentially illegal disclosure of electoral material, as well as outbreaks of violence and allegations of election tampering and intimidation in various locations across the country. Now, granted, Nigeria's elections have been criticized in the past by the European Union and other monitors quite frequently so. But in this case, it is interesting because the defeated candidate, Atiku Abubakar, former vice president who ran against Mr. Buhari as the main opposition candidate, he still has a very strong case with sufficient funding also to take us to the highest court of Nigeria. So over the next few months, I would certainly keep watching the Mr. Atiku Abubakar's and his lawyers' proceedings to move towards the Constitutional Court, and also any international momentum this campaign may take. I have to warn, though, that the makeup of the Constitutional Court was changed 6 weeks before the elections in February, and the loyalty of the current bench has not yet been fully tested. So it is not yet 100% sure whether the current bench is completely independent or might steer towards the incumbent government. I'd also like to mention that despite the international criticism of the electoral process in Nigeria, the general perception is that the priority is to maintain peace and stability in the Republic of Nigeria. That means that no international partners are likely to come out with very strong criticism or indeed even sanctions or other punitive measures in response to the electoral criticisms. That would anger the Nigerian government and potentially destabilize its very volatile and restive regions. So I'm certainly saying that it's very important to keep on watching the outcome of the electoral process, which is not yet fully complete. But I would not hold your breath to see a repeat of Kenya's annulment and rerun of elections in Nigeria later this year. So certainly very important to keep your eyes on, and I think also a really important example or case study where the issue of elections really comes down to whether this actually has a commercial impact or not beyond the immediate short-term disruption. I was going to suggest that if there are any further questions which we do not have time for today, then you are very welcome to drop me an email, as I suggested earlier, at robert.besseling@exxafrica.com, and I'll very happily either directly address your question or send you some of the recent reports that we have written that might provide some further insight into your particular query. Back to you, Alex.
Perfect, Robert. Thank you. I've also put your email in the chat, so everyone who doesn't have time today, can reach out to you separate, sort of individually, if they have any questions. I think, well, we have one question here on Uganda, and I think also I would like to ask it as well. So thank you, Peter, for prompting that. Peter has asked sort of why you have Uganda as a severe risk, and I think given the announcements last week on I think it's the second patient to die of Ebola in Uganda, I think as a final point it would be quite I would appreciate just a sort of an update on your views on the country's sort of risk profile and also for our audience as well.
Yeah, thank you very much, Peter. Uganda is a good example, quite similar to Kenya, where we have to look forward in terms of the country's risk outlook. I wanted to remind you that the color coding and the quantitative risk scoring you saw there earlier is very much based on in the 1-year risk outlook. Now, Uganda is moving towards an electoral process in which the incumbent, President Museveni, is likely to run yet again and likely to win yet again and retain the presidency for at least the significant future. So this is building into the frustration of large segments of the population, both in the cities as well as some marginalized rural constituencies, where political grievances towards the incumbents are becoming increasingly pronounced. This is also building into disappointment over the oil sector and the bringing on stream of Uganda's oil revenues, which may be further postponed into 2022-23 or potentially beyond that. And it also builds into a potential concern over the debt sustainability of Uganda, where, very similar to the point I made on Kenya, Uganda will increasingly start to struggle servicing some of its debt. So again, there's a number of factors which, even though Uganda seems relatively stable at the moment, in the 1-year outlook, however, we are becoming more skeptical that this stability and this forecast will actually hold. Therefore, we are a little bit more pessimistic for Uganda moving forward, unlike some other countries where we've, of course, been more optimistic and downgrading their risk profile in the other direction. So yeah, thank you very much for that question. And again, if you would like to know more about what I just mentioned on Uganda, please drop me a line and I'll send you our most recent reports on that country.
Thank you, Robert. And as I say, very sadly, we will have to finish there as we've run out of time. But as Michelle has said, thank you so much for a really great discussion and for partnering with us today. Thank you also to all of our listeners for joining us today. And if you would like to participate in one of our webinars in the future, please do get in touch with myself or Alexander Woods. We do look forward to hearing from you.